that, let's also talk about the moves that we're seeing in the money markets, because rupee and bonds are both seeing a sharp fall dragged by dollar, yen, as well as global yields. So Latha is here with the details. Latha, take us through the moves that we're seeing in the money markets.
I would venture to say that the Bank Nifty is struggling a bit because of the happenings in the bond market in particular, though rupee and bond are weaker today and weaker substantially. The rupee is actually weaker nearly 5%. Nearly 0.5%, 0.5% compared to yesterday. But let's begin at the beginning. The big news overnight was that the US GDP number has come in much stronger than was expected. It was expected to come 1.8% higher. The second quarter, it's come in 2.4% higher. I mean, people are wrong by almost 50% or 30% going by the expectation. This led to a sharp rise in bond yields. Now, why would bond yields rise when things are growing well? Naturally, the demand is higher, and that is expected to result in higher prices, which means the Fed's work is not done. And that's what pushed US yields up by 15 basis points. The 10-year went above 4%. And that led to a surge in the dollar as well. Dollar index moved from 100.6 thereabouts 24 hours ago to about 101.8. You know, that would normally be a over 1.5% jump. And that led to a surge in yields all over the world. And then there was yen news as well. Let's get to the yen news that came this morning. The BOJ did not change yields, but did not change rates, but it did add a tweak to its policy of controlling the yield. The BOJ controls the entire yield curve. I mean, it keeps the shorter term yields at minus 0.1 and it keeps the 10-year yield at 0.5. Now it said that it will be flexible about keeping it at 0.5. And yields went to 0.505, the Japanese 10-year. This, again, is a very important factor because, you know, the yields moving up even by a smidge has an upward impact on yields all over Asia. Most important point is a lot of Japanese who are big investors worldwide could invest in their own yields because the yields are high, and that might take away money, which explains why the risk markets, equity markets are also a little bit somber. To come back to the Indian markets, you're seeing the impact on the rupee. The rupee had closed at 81.93 and opened today at 82.28, even went to 82.3 at one point in time. That's almost a 0.5% fall. Sorry, not 0.5%, 0.5% fall in the rupee. And this was in sync with all EM currencies. Again, you saw the movement in the yield. The Indian yields, which closed at 7.09 overnight, the 10-year yields had moved to 7.16. So clearly responding to global pressures. And of course, there is the cereal inflation in India, which is also helping.
Okay, got that. Thanks very much for explaining that to us, Latha. That's the move in bond yields that we are witnessing today. But we're